talk much more about this right now. Brad Hunter, chief economist at Metrostudy, joins me from West Palm Beach, Florida. Brad, good to see you again. Nathan's question is a good one. Did the shutdown have a permanent impact to the housing market?
Good to see you, Phil. You know, I think that there has been a lingering impact on people's confidence. I think Americans are a bit panicky about what's ahead in terms of the economy, but I think that that is going to be paired with higher interest rates in years in the future. I don't think it's going to be a big problem in 2014, but as we go further into the future, I think that higher mortgage rates are going to be a problem. Hopefully by then, the consumer confidence issues that we're sensing right now will start to subside, and hopefully we'll have more job growth that'll offset that.
Brad, we talked about housing starts the other day, and the guest on air with me said that, well, it's still less than half of where we were at the height of the housing boom. And my response was that, well, just because they're building a lot of homes doesn't mean it's necessarily a good thing, at least for prices. Is the housing market healthy as it the way it is now?
Well, I mean, here we are at about 1 million housing starts a year at the current pace. A steady state, normal amount of production would be around 1.5 million. What we have just gone through is we went from a period where household formations were historically 1.3, 1.4 million household formations a year. In 2009, 2010, it fell to around 500,000 a year. Much, much lower. Now it's back up trying to maintain a million a year.
Wait, Brad, when you say household formation, you mean two people getting married and wanting to buy a home or having kids. Am I correct on that? So are less people, I guess, having kids?
Yeah, well, it's not exactly limited to that. It's anytime somebody goes and strikes out on their own. It could be a 30-year-old that's still living in mom's basement. He moves out because he's got more savings in the bank and he can go buy a place or get an apartment. That's a household formation too. So it's not just new families starting. It could be two people that unfortunately get a divorce. That creates two households out of one. So all of these things together, what happened that took the number so low is that people were doubling up for economic reasons. They were getting roommates. There were record numbers of people in their 20s and 30s moving back in with mom and dad,
well,
and
that
Brad, slowed down
bring up a
overall
good
demand.
point. You bring up a very good point, and that is, for some people, the dream of really owning their home isn't the same as it was 10 years ago. I mean, a lot of people say, look, I'm happy to rent because it allows me to be mobile, and if I end up getting a job in a different part of the country, I can move in 10 seconds.
There's no question. There's a certain group that is saying, you know, I don't get this whole American dream thing. I don't get why ownership is that big of a deal. I saw my parents go through all kinds of problems with ownership. I'd rather rent. But surveys do show that sooner or later, even the Generation Y group that are currently renting like crazy are going to want to get their own home, to own their own home. So that is the longer term trend. We're experiencing a shorter term adjustment. There is a bit of a stigma in a way against ownership for some people. I think that's going to go away over the next couple of years, and they're going to say, you know, I need a single family home and it's time for me to buy.
Brad, very
and
quickly,
start building equity.
Looking across the country, a lot of people think, well, the U.S. is it's all one big place, but it's really not. It's a lot of different places put together. Any parts of the country where you see strength and where you see weakness?
Yeah, like you said, it's a mixed bag. You know, Houston, Texas is one of the strongest, if not the strongest housing market in the entire country. Florida has made a substantial rebound, despite the fact that they have a judicial foreclosure process. That means it took a lot longer to get through the foreclosure mess as in California. California's a non-judicial state. They were able to get rid of their foreclosure supply much, much more quickly. Same thing about Phoenix, Arizona. Phoenix has lived up to its name. It's risen from its ashes. Phenomenal increases in home prices, phenomenal increases in housing production, and Las Vegas itself is starting to come back in a big way as well. These are the markets that went down the hardest. They're the ones that are coming back the fastest.
All right, fascinating stuff. Brad Hunter from Metrostudy. Good to have you on the show. Thank you very much, and have a great week ahead. Now